So many of you have been seeing a lot of rhetoric going around about, the abolishing of the IRS. That's not going to happen. Okay. Two things cannot be true in this case. So let's talk about the proposed changes coming to the tax code. Now, President Trump enacted the Tax Cuts and Jobs Act in 2017, which enabled a huge transfer of wealth to a lot of business owners, real estate investors, etc. And a lot of you think that these are strategies that are meant for the uber wealthy. I have to tell you, it is not the case. I built my empire over the pandemic using the tax code. I am a former revenue agent in a large business and international division of the IRS. 20 years total in audit, accounting, and tax. I spent more than a decade examining S corps, 1065s, partnerships and the like. And I have to tell you, if you want to build wealth, for sure, you have to move within the tax code. So let's talk about some upcoming discussions with the new administration, which is, again, also under President Trump. He's looking to actually extend and probably permanently the Tax Cuts and Jobs Act. Why is this important? Because his priority is business, right? And business activities are those that are non-wage earning activities and real estate investing, not your primary residence. And one of the biggest flexes in the tax code is bonus depreciation. What's bonus depreciation? It's just a fancy word for big expense, right? So it allows real estate investors and business owners to take qualified property, and we'll use real estate as an example first. You buy a rental, and normally you get regular depreciation, which is just taking the cost of the asset and dividing it up into its useful life. And a lot of examples, it's 27 and a half years. For my commercial buildings, it's 39 years. And my Airbnbs is 39 years because it's considered commercial, right? And that's 5 units and up or your short-term rentals. For my residential units, that's 4 units and under, and that's 27 and a half years. Now, what the tax code did, right, in 2017 is say, hey, normally we only reserve extra depreciation for new construction, right? Which didn't fit a lot of real estate investors. Most of us, we purchase resale, right? We purchase a property that's already erected, it's already been owned by somebody, and we just rent it out after the fact. But the Tax Cuts and Jobs Act said, hey, we're gonna allow this extra expense to regular real estate investors. Now, what is this extra expense? It is things that are depreciable under 20 years. So for the most part, it's 5-year and 15-year items, and you're allowed to take a huge expense in the first year that you place the asset in service. So if you purchase a property for rent, you now get your regular depreciation for the 27 and a half years for residential property, right? And then you get, and 39 for commercial, and then you get an accelerated expense in the first year called bonus depreciation. So what does that look like? That is an expense that's allocated. You don't have to spend any money. Okay, just like when you purchase your property, you get the regular expense allocated over the course of the useful life of the property. You get an expense allocated to 5-year and 15-year items inside the property because it's considered an asset. It's in use, right? Unlike your primary residence. So 5-year items are things like your appliances, your appliance wiring, your removable flooring, your kitchen cabinets, countertops, etc. Ceiling fans, blinds, curtains, etc. 15-year items are things like land improvements, your driveway, your walks, your fencing, and other land improvements. And what this does is it creates a huge phantom expense, right? When I say huge, I mean it can be over $100,000 in an expense you get to take in the first year you place the asset in service. So now what happens is the expense creates this loss, and it's only a paper loss because it doesn't really, it's not an expense that you pay, it's an expense that you receive. This loss now can offset all other income if you meet real estate professional status or the short-term rental loophole, right? And I'll discuss that separately. And so what this did was create such huge losses that, and these losses now you can carry over to up to 20 years for future income years, and it can offset the following year's income and so forth and so on, right? So this is what was happening, and this is what I utilized. I have losses that I took from bonus depreciation that carry over and offset income for many years to come. And so this is how the wealthy use real estate to pay no taxes, okay? And with the extension of the Tax Cuts and Jobs Act, I think it's important that we understand the implications of building wealth moving forward in this administration. All right, so if you want to learn more, go ahead and click the link in my bio. Join my free live training Tuesday, 8 p.m. Eastern Standard Time, March 25th.